welcome. You're watching Business Today Television. I'm Sakshi, Batra, and this is the earnings special edition. Our focus is on the Dr. Lal PathLabs earnings this time. The diagnostic chain company has reported a 49% increase in its net profit for Q4 at 84.5 odd crore rupees as compared to 56.7 crores reported in the same period last year. Revenues have also seen an increase of 11% year on year to 545.5 crore rupees. Now, there are other parameters as we will get to discuss all of this with the top management of the company. Joining us right here, Dr. Manchanda is with us, the MD at Dr. Lal PathLabs. Warm welcome to you, sir, to Business Today Television. It's good to have you. Strong set of numbers. Congratulations. And the street has also given a heads up and a thumbs up to this kind of earnings to you. Do tell us to begin with what really contributed to your profitability in this quarter, and more importantly, would it be sustainable, sir, going forward?
Thank you and good afternoon. There are 3 or 4 key factors that have contributed to this growth for us this quarter. I think the number one is, I would say, Swasthfit contribution, which is our preventive health package that has gone up from 22% to 24%, and that has a direct impact on our revenue per patient. When that goes up, obviously our revenue tends to go up. Second also has been that the first time that we have observed that our geographic mix has been pretty good in terms of growth. So all our regions have given us handsome growth. Earlier, Delhi NCR used to be slightly lower than the overall India average, but this time Delhi NCR also has contributed to this. And I think in general, the high-end testing is also going up. So all in all put together, that has actually helped us better numbers this quarter.
Okay, sir. And now a little bit on the expectations as we begin this FY25. What is your expectation on both the top line as well as on the margins front, sir? How are you looking to grow on a year-on-year basis?
We are exiting the year on a much more confident note, primarily because I don't know if you remember, we took a price increase in February of 2023. So that 1-year cycle was getting completed this year in Feb. So we were a bit sort of anxious whether we will be able to sustain the growth or not. But given the base has already got this price increase baked in, and despite that, delivering 11.1% gives us confidence that we should be able to beat our last year numbers as we go forward.
Okay. So also as far as the growth on the margins front is concerned, would you be looking to sustain these margins at about 26% on the EBITDA level? And going forward, do you have any levers to further look at upgrading this margin band?
We definitely won't really go above these kind of levels. We've always maintained that our endeavor is to remain range bound between 25-26% margins, and as and when if there is a possibility, we plow it back into investment in the business. So I would actually say that this year was an exceptional year because we took a lot of productivity-led initiatives. But going forward, we are still very confident of sustaining these margins around these levels. But definitely, yeah.
So could you break it down, sir, further for us? Like, say, for example, you talked about Swasthfit, then you also have the Suburbans. Could you tell us how are the margins for each of these and how do you see them panning out?
Suburban Diagnostic as an organization always had a lower margin than overall as a company that we deliver for parent. That in any case, we knew it before as well. So their margins are nearly about 12%. So we still have a long way to go to deliver that kind of margin as the parent company delivered. But right now the focus on Suburban is to really drive volume and value growth on the top line front rather than looking at profitability, because for us the West region is a very important regions, and Mumbai market is definitely a very significant sort of platform for us to expand from the rest of the Western region. So we will continue to stay focused to drive top line in Suburban as of now, at least for next couple of years.
Okay. So you did talk to us about the price hiking cycle of 1 year completing. Going forward now, would you continue to look at price hikes going forward?
No, actually, given the choice, I definitely would not like to take a price increase. And as of now, our internal thought process is that we will not do that unless pushed to the wall. But I think the way things are moving, I think we will be able to give it a pause and not take price increase for some time.
Okay, but sir, is there any higher intensity in terms of competition that you're facing on the pricing front as well? There have been constant new entrants, startups also coming in with lower price tickets, offering on bundled checkups. Is that a space that continues to be a concern for you?
See, this space has traditionally been very competitive. Before COVID, my sense is the competition was primarily coming from only one direction, which was unorganized segment. I think during COVID period and even post-COVID as well, the competition is now coming from some pharma players coming into the space, or even hospital players also entering into this, and then one has e-commerce players, etc. So I think there was a phase when the intensity was very high and primarily driven through pricing and deep discounting. What we are seeing now is that number of players are still the same, but this whole irrational competition in terms of pricing and deep discounting, I think those days are getting a bit eased off now, as we are seeing it right now.
Okay, sir. And on your expectations of the volume, sir, do they continue to sustain?
Actually, volume is a combination of both footfalls as well as number of tests per patient. While I don't have any sort of a data to substantiate this argument that I'm going to share with you, but what we are seeing is that the contribution of Swasthfit is going up. Uh, More and more tests are being done in one visit itself. So there is a bit of a, I would say, adverse impact on the footfall because you don't need to visit more frequently to the lab once you get all your tests done in one visit itself. So in terms of volumes, we are looking at both footfall as well as number of tests being done. While on the footfall, there has been some decline compared to what we used to experience earlier, but there has been a massive jump on the number of tests being done overall. So I think volume is a very important sort of metric for us to monitor the progress. But we are pretty happy as far as the progress has been in the last quarter. We would love to see slightly higher footfall than what we have seen.
Okay, so what about realizations per patient? Where are they at and how do you see that panning out?
Actually, that is one area which really shows positive sort of a jump. Primarily, again, as I mentioned in the beginning, that Swasthfit has been a very important contributor to that. Because if you do more tests per patient and more tests per visit, your realization tends to go up. And we are seeing higher revenue per patient. There are many other variables that are contributing to this. One is the higher end testing being on a higher side also contributes to the higher revenue per patient. So I think overall it's been a great sort of a run for us on revenue per patient. But to my mind, last year we took a price increase, nearly about 3% got impacted on the revenue. I think that to me will go away this year, but it will get offset by higher contribution coming from the volume.
Okay. So I also just wanted to ask you, over the last few months odd, there has been an elevated awareness about young people falling prey to severe conditions like heart attacks, etc. Is this a space that you feel will now get you more and more patients to start looking at regular testing? Have you seen a trend already start to build up, especially when it comes to young and fit Indians?
So I probably won't be able to comment on that because I don't have any particular data to support what you're asking me. But I think the qualitatively overall health awareness and people wanting to take care of their health is much more compared to what I used to see, let's say, pre-COVID times. COVID actually has brought that sort of behavioral change in the society where health definitely has taken a much higher priority than what it used to be earlier. And which to me is a bit of a positive sign because uh, in healthcare, if you catch certain disease early, the chances of actually treating it are much better than catching it at the last stage. So to that extent, I think proactively people reaching out and getting themselves tested is a positive sign, I would say.
Okay. Sir, one question on the market share, if you could detail for us, where are you at? Has it been on the upward trend and where do you see it headed?
I know this question often gets asked to me, but honestly, we really don't calculate this data on a day-to-day basis or even on a yearly basis as well. For two reasons. One is, of course, there is no structured sort of data flow that's there in this space. There are a lot of these estimates that are there. Second is the market is fairly large, and whenever we do this math and we just sit down and decide that we just come out with the analysis that our market share on all India basis just in single digit. So we have a long way to go, and India is highly underserved, underpenetrated market. So I think the size of opportunity is not a challenge at all. I think it's just we are being limited by our imagination or what we can actually do. So it's about we have a long way to go. So market is very large.
Okay. So also do tell us, how are you planning on an expansion, plus going forward from here, more chains, more diagnostic centers from you emerging, especially when it comes to tier 3 expansion of yours. What's your strategy now going to be in FY25? Do we see that number going up substantially? And also, how are you looking at the cash on your books currently? What is the way to deploy it further?
So on growth, we have two pillar strategy. One is organic, where that's what we have done all these years, and we know how to really go about doing that in core markets. And we will continue to expand what we call a hub and spoke model, where hubs are our labs and spokes are our collection centers, and that will continue to happen. The second pillar is look for certain strategic partnerships through either acquisitions or alliances in those markets where our presence is weaker. And if I map out the whole country, I would say that southern and to some extent western regions are the two regions where we have lots of white spaces in terms of markets to be tapped. And there we will look for strategic acquisition in these markets. So coming back to your questions of cash, obviously we will use it both for organic growth as well as inorganic. And in addition, we are also, you must have seen that regularly we are paying out dividends as well. So it's a combination of all these things that will help us deploy this cash.
Okay, sir. Well, thank you so much for sharing all those insights from the quarterly earnings as well as the vision going forward. All the very best to you, sir, for the upcoming quarters too. And here's hoping that we can catch up again to understand more about the growth going forward. Many thanks for sparing your time for us.
Thank you.
All right, viewers, we will wrap it up at that. That was Dr. Lal PathLabs. The stock is still hovering higher by about 6.5% after those stellar set of numbers, and the management seems confident of the growth going forward from here as well, even though no price hikes until pushed to the wall as of now. Even though the competitive intensity continues to grow, there is some kind of easing of pressure on the deep discounting factor that the management is looking at as of now. We'll wrap it up at that, but do stay tuned on to Business Today as we continue to get you everything that's buzzing on the street from the world of business and stock markets.